Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalized investment advice. It is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto. The technicals for Bitcoin. So I guess the key downside level to watch is 20,000 because it's a big psychological level. The monthly pivot point for me comes in around 22,000, but the actual weekly pivot point is around 21.6. So we're trading right back towards the weekly pivot point now. And if Bitcoin can hold above there, especially after the Federal Reserve today, then there's a strong chance that we could get back above the monthly pivot, and then we could get towards some interesting targets like 24.3 and maybe 26,000. If we have any daily price closes below 20,600, I think that's going to be a bearish signal, and the market could probably move back towards 19,700. If we lost 19,000, then I think Bitcoin would probably collapse towards 17,000, but that's not my primary scenario at the moment. So let's have a look on the charts, and you can see over the last few weeks the battle has been with the 200-week moving average. It's been tested, retested, and we got rejected in the lows on Sunday, and the market still haven't been able to get above there this week. So you can see there's been a big battle with the 200-week moving average, and the bears are winning at the moment. But if we were to close the weekly candle above that, that can probably set off a lot of technical buying. Some other interesting things I've been looking at. If you look at this falling wedge type pattern, that could indicate that we could see a move coming over the next few weeks towards the top of the wedge, or either the bottom of the wedge. If we look at the top of the wedge, it comes in close to 30,000. Maybe that scenario plays, and then we get a reversal back towards 16,000, or alternatively, we drop today, move towards the bottom of the wedge around 16,000, and then we bounce back to 30,000. So that's what the pattern is suggesting, and I think that's what a lot of traders are looking at as well. If we have a look at this Wyckoff pattern, it's actually doing the reverse of what normally happens when we reach the final phase. So if you see when the Wyckoff pattern starts to play out, the market starts to normally consolidate a bit, but it's not making any new lows. But if you have a look at what Bitcoin is doing, it's starting to make new lows, which is making me nervous about this pattern here, because it should be doing almost the opposite. It shouldn't be making these lows. It should be getting ready to make a new high around phase E. So what we really want to do today is break above 24.2, and then we know that this pattern is pretty much on track, and we can get an explosive phase E move through to maybe 26,000. And I guess if we don't get that move and the market breaks underneath yesterday's low, then the risk is that we're going to drop down to 18,000 and then 16,000 after that. So summing it all up, we're hoping for a big reversal from current levels today. Cannot discount a rally from current levels. A drop below 20,600 could cause a big decline in the market today. The Wyckoff pattern is becoming questionable, so we need to see that playing out quickly. And the bullish falling wedge pattern that I've just showed you is also present, is indicating that medium-term price action could be between 16 and 30,000 over the next few weeks and months. So let's have a look at Ethereum now on the charts, and you can see that the Wyckoff pattern is much more developed. It's much more bullish than what Bitcoin's been doing. You can see it's followed that classic pattern of higher highs. We've had a pullback today, but I still think if we look at it through the phases, it does look like it's more bullish than Bitcoin, and it can still play out even though we've had a pullback. I think there's definitely an argument to be made for a phase E. And I think if we have a look at as well, it's making the same type of falling wedge pattern that Bitcoin is, and it's indicating that Ethereum could start to trade in a range between maybe 900 and maybe 2,200. If this is correct and Bitcoin does move higher, that's the sort of range that we can see over the next few weeks and months for Ethereum. As well, there's a bullish divergence on the chart. If we have a look here, the price is falling and the histogram is moving higher, so that indicates we could get a move towards 2,200 if the market does move higher. Look at the time frames though. It's a daily time frame divergence, and this can take weeks to months to move higher. So the risk is a move down, another new low, and then this turns into a much larger reversal pattern. So the scenarios for me, either 2,200 or another test towards maybe 900 or 800 for Ethereum. It all depends on what's going to happen with the Fed today, most likely. So overall, Ethereum could be headed back towards maybe 2,100 to 2,300 if we see the bullish scenario. Watch out for a continuation of the Wyckoff pattern if the market heads higher today. A falling wedge pattern is seen on the daily time frame, and that's indicating a really large range between $900 and $2,300. And as I've mentioned, there's bullish MACD divergence, which suggests that eventually it's going to move back up above $2,000 at some point. And thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.